All right, we should be getting going in just about a minute. I think we're waiting for one or two more people. Okay, we got, looks like we have quorum. Good morning, good afternoon, good evening, wherever you are listening in from. Welcome and thanks for joining the spaces to talk about the future of payments and blockchain and what is a pretty exciting time in what's going on in fintech and payments and stablecoins and blockchain. So we've got a couple of other moderators, subject matter experts. So maybe we can do a quick round of intros. I think John. So well, let me start. I'm Shiraz at the Solana Foundation. I lead the vertical for payments from a growth perspective. And John, are you on? Do you want to do a
Yep.
quick?
Yeah, absolutely. Hey, everyone. My name is John. I run the engineering team at the Solana Foundation. I help guide a lot of folks in understanding Solana, particularly around token extensions, but also just understanding their product and business and seeing how it works better on chain. It's great to see everyone here, and I'll pass it over to Arnold.
GM. My name is Arnold. I'm the CEO and co-founder of Sphere. We are a stablecoin infrastructure platform born and bred on Solana, and super excited for the spaces. Have been going down the rabbit hole of fiat and crypto interaction. So very excited to dig into those details. But appreciate Solana Foundation, Shiraz, John, Stein, and David for helping to coordinate this.
All right, Stein, are you on?
Hey, Shiraz and team, great to be here. I'm not going to say GM, I'm going to say good evening because I'm based in London. So I'm a Dutchman living here with my family. I've been building SaaS companies for the past 20 years with my co-founder, Jim. And for the last 2 years, we've been building Helio. It's a self-serve payments platform built on Solana. Our objective is to make it super easy for any merchant or creator to accept crypto native payments, stablecoins, but also hundreds of other digital currencies. We're really focused on things like e-commerce, creator payments, and yeah, it's been super exciting actually to see the last 2 years to see how this space has evolved. We've got now more than 5,000 merchants and creators selling for all sorts of weird and wonderful use cases. So really looking forward to dive into the spaces. So good to be here today.
Awesome. And last but not least, I think we have David from PayPal on. David, you there?
Hey everyone, how you doing? David Weber. Good to be here. I'll say GA. Good afternoon on my end. So I lead partnerships in institutional markets for PYUSD at PayPal. Basically, my role consists mainly of working with the ecosystem to support and grow PYUSD, across crypto exchanges, custodians, DeFi, traders, you name it. But also traditional players that we work with, like banks, brokerages, and obviously our merchants that process payments with us. Good to be here.
Awesome. And just a quick reminder for anyone listening, you can use the chat bubble on the bottom right of Spaces to ask questions that we will get to at the end of the space. So yeah, let's get going. And so we've got actually a great group of people. I think there is a lot. Obviously payments is a broad topic, and having Sphere and Helio, just a couple of the many different apps being built on Solana is great, because I think we'll hear not just about kind of some of the big news we've heard recently, but some of the other stuff that's has been built and is thriving or is going to be built in the future. But let's start with the stuff that sort of is on everyone's mind, the more recent news. So David, do you want to kick us off and talk a little bit about PYUSD and the launch on Solana, and maybe talk a little bit about how you guys kind of selected Solana as kind of the next chain. But more importantly, what do you think this is going to open up for PYUSD, being on a fast and cheap chain, and what are you excited for over the next 6 to 12 months, and what do you want builders to be excited for?
Yeah, for sure, for sure. We're super excited to have launched. It's long process to get here. Before we were just on Ethereum, which is obviously very expensive for payments. It's actually impossible. But there are many reasons, outside of payments, to have chosen Solana for the expansion of PYUSD. So the obvious things: high speed, low cost, instant finality. These are things that our merchant base, of which there are 35 million of them, a ton of merchants that if they're going to listen to us to accept stable coins, they're going to need something at par or better than what the traditional banking system can offer. But PYSD is built for payments, obviously, and settlement across the different products at PayPal. So we were at PayPal, we were super excited to launch on Sol. When you look at some of our products that PYUSD will be integrated into merchant settlement. So settling with merchants as opposed to dollars or fiat in T+1 or 2. Zoom is our cross-border remittance money transfer product that is fairly large, competes with like MoneyGram and those players. We have a company, Braintree, which is basically our payment processor that's just unbranded, so you don't see PayPal. It's just enter your credit card information. So that's very exciting for on-chain payments. A QR code where you can accept PYUSD as a merchant, and the PayPal button doesn't show itself. And then obviously with the PayPal branded flow, which is checkout with PayPal. But more importantly, or not more importantly, but also we were really attracted to the token extensions piece. To get the 35 million merchants at PayPal to accept and use PYUSD possibly one day, and obviously we're educating them. We needed the unique features of token extensions like confidential transactions, whereby not everyone can see that I purchased hamburger buns or something at online, or settled, or a merchant like Nike is settled over 10 million in a day with PayPal. We can't have that, right? So it's got to be confidential. And then the permanent delegate extension is really important for regulatory purposes. We'll get into this a bit later, but obviously, PYUSD, we're not obvious, but we're regulated by the NYDFS in the US. And then lastly, memos is really important as well for the extensions for us, because we want to see what the transaction is for something like Zoom, where you're sending money peer to peer, cross border. You gotta memo that transaction, and if it's going to be on chain, people need to know what it's for.
So my takeaway is that you are very concerned about everyone finding out how many burgers you eat. Is that the deal?
Yeah, I'm eating a lot of burgers. July 4th is coming up here, and it's going to be great. We need that to be confidential. No one needs to know that.
Yeah. No, that's great. Well, yeah. So on token extensions, John, it would be good. Hopefully, if we've done our job, most of the listeners have at least heard of token extensions or know a little bit about it. And I think David covered a little bit. But John, do you want to talk a little bit about token extensions, maybe at a high level, and then specifically like why it. And I'll talk about it as well. I don't think there's any silver bullet, but this is, it may be as close as one can come to really helping stablecoins kind of explode in the payment space. But yeah, John, do you want to talk a little bit more about token extensions for those that might have just heard about it that much?
Totally. Yeah. Yeah, you're right. We have been talking about it a lot, but there are always new people every day that need to learn new things, and we're happy to teach. So, what's cool about token extensions? Actually, let me back up a little bit here and talk about what's cool about just tokens in general. On Solana, you have a single token program that a vast majority of tokens use. What's cool about that program is that it's already built. You can use it on chain. It has all the basic capabilities, your mint, burn, transfer, freeze, delegate, all that sort of stuff exists already. And that means that, you can just use something off the shelf rather than having to design, deploy, audit your own smart contracts. And that's a large reason why there are so many tokens that can be easily deployed on Solana. But when you need to have more complex use cases, or if you need compliance, or if you need to have some permissionedness to those tokens, or you need to just be more expressive with how those tokens can be transferred, that's where token extensions comes into play. So token extensions is another version of the same program, has all the basic capabilities of a token, has all these things that you can take off the shelf, but it includes many of the things that David already referenced, things like confidential transfers, things like permanent delegate, but also things like transfer hooks and other things that allow you to permission where they get transferred. Things like transfer fees to allow for some different economic capabilities for tokens, as well as a long tail of things like metadata and other nice things to have. And these were very much designed, with institutions in mind. I think that, PayPal has been a great a thought partner and a hero customer in terms of designing the kinds of things that would allow people to feel more comfortable, businesses to feel comfortable building stuff on chain, right? Rather than having to go build off in their own chain or their own private network, they can feel safe knowing that there's some compliance built in at the program level. And I think that it just allows for a lot more use cases that take advantage of the composability of the broader Solana blockchain, right? The big global state machine that we're here to build. So it is a great program. It's easy to approach from developers, and great for businesses.
Yeah. And I mean, we've talked a lot about it being sort of built for institutions, but I think there's a lot of, startups and sort of crypto native use cases as well, which, we can talk about. But yeah, I think like interestingly, like transfer hooks, like, the simplest kind of functionality there is just thinking about like having like blacklists for like, sanctioned wallets. But John, you've kind of pointed out some interesting other examples of use cases for transfer hooks. Do you want to talk about some of those,
Yeah.
like crypto native ones? Because I think like it's essentially like it can be any an arbitrary program that governs how wallets and the tokens interact, and that opens up a lot of interesting use cases.
Yeah, totally. There's a whole bunch of different products that can be built here with a combination of different extensions. So, for example, the concept of like temporary ownership is totally possible. So, having subscriptions, right? A token that represents a rental for a short period of time, having a certificate that is being issued to your wallet. This concept of soul boundedness. My soul is not my wallet. So, if I lose my wallet, I kind of want my whatever it is, my diploma to get transferred from one place to the other. All of those things can be governed with programs and smart contracts. And I think that's super powerful. With transfer hooks, you can also specify things like on chain points. So if you have a loyalty point system or games points, the reason why this is interesting is that, folks, for one reason or the other, don't want their points to be liquid, right? But you don't need to then just put everything off chain. You can still put everything on chain, but limit it to a set of different programs and smart contracts that can interact with it. Now, okay, so why would you want to do that? The reason why is that as soon as you start having partnerships, now you can very easily add them to that access list that Shiraz mentioned and slowly grow the capabilities of that off chain, or sorry, that loyalty points over time and with a permission set of folks, and still maintain all the nice sort of composability factors of using the same tooling that you use for your on-chain tokens. And then at some point in the future, if you're like, hey, these points are super valuable and there's a broader ecosystem to engage, you can always remove it. But starting off chain, really limits a lot of the capabilities on the composability side. Um, and then there's other ways to represent NFTs and other things like that. The token program is really a great atom, a great primitive that can be used to build all sorts of stuff, payments included.
Cool. Arnold, I want to bring you in because we just chatted last week at Consensus, and it sounds like you have gone deep down the rabbit hole of looking at how banks and fintechs settle cross border. You're probably the deepest person I know that understanding like how the Swift protocol works. Can you talk a little bit about just what you've been learning and how some of these tools that we're talking about, or maybe kind of just talk a little bit about like what are some of the complexities of these big banks, and like how you see blockchain kind of or where you see sort of the killer use case or the early low-hanging fruit use case, which I think everyone consensus right now is like cross-border has got the most friction. But tell us more about what you've been learning there.
Yeah, absolutely. Yeah, the rabbit hole of Swift is where we've been spending the majority of the last I'll call half year. So these days, a lot of my work is to chase down wires, coordinate with banks, both sending, receiving, and in some cases intermediaries, to figure out where a wire is on a given day or given time. A lot of weird, I suppose, grandfathered um, events from this system created in 1970, such as if you send in a bunch of wires around noon, East Coast time. There's a decent chance if it goes through a dollar correspondent, it'll take longer than if you submitted it right at the beginning of the day or after lunch, because odds are the people who are sitting in the wire room might be at lunch, or there's a ton of orders that day, and hence they have a lot more to get through before ultimately getting to the one that you're coordinating with. I think one key lesson is how manual the whole life cycle of an international currency transfer is. So if Swift is, the messaging protocol, and only now less than 10,000 banks across the world have direct access to Swift, so they have their own Swift code, and they're effectively given a seat at this table. Oftentimes, smaller banks will rent out these Swift codes or have a larger sponsor who will facilitate these international currency transfers for them. And if you think about like the United States against maybe another developed nation like the UK or Australia or something, the support is fairly robust. Um, there's a lot of flow going in between those two counterparties. But even at the level of Swift, you'll notice that the fees are much higher for less well-supported corridors. In many cases, some of these countries became in their current independent form just a couple of decades ago. And so it takes time to build out all this infrastructure to convince correspondent banks in the countries where you would like to do trade with to issue you and your end merchants accounts. Let al-
What do you sorry to interrupt. I was just curious then, like, what do you think the barrier? I mean, it seems like stablecoins and blockchains solve this, uh, almost trivially. What's holding it back?
Yeah, I like to describe it as a chicken and egg, where the original vision was to replace intermediaries. But when you have like a Wild West, a lot of things happen, both good and bad. And it's the job of regulators to protect their citizens. And so naturally, they're thinking about what could go wrong. And the investment that it takes time-wise to really dig into the details of what's happening across all these different blockchains, what's happening at the forefront of various technologies, whether it's on distributed systems or zero knowledge proofs or what have you, is kind of out of scope for a regulator who also has to think about other verticals, industries, even if they're focused on, say, a money transmission like FinCEN. So it ends up resulting in, I'll call it like a wide approach or a generalized approach, where you want to prevent the worst case scenarios from happening. And if there are a lot of details, you also don't want to be too restrictive because laws can be quite difficult to unravel. And so the end state is a lack of clarity, where, if you are a financial institution, not necessarily a bank, the buy-in when the laws are vague, it becomes a lot riskier. And I think a key lesson for why stablecoins, to your point, kind of trivialize the cross-border payments experience. A key barrier has been that risk is not a binary. It's a spectrum where oftentimes it is up to a compliance officer who has limited context in determining whether or not something should be allowed or something shouldn't be allowed. So, in our attempts to engage with, merchants and compliance people throughout the, sorry, I just wanted to double check here that you guys can still hear me, or have I frozen out?
Yeah, no, we can hear you.
Okay, amazing. So yeah, in our attempts to interface with compliance folks, convince non-bank financial institutions to settle directly on chain, or even to make more direct integrations. It's been a challenge because there are a lot of these terms that don't best fit to traditional conduct of AML CFT as a broad legal principle. Namely, what happens if there's interaction with someone that you haven't identified? Traditionally, you need to do CDD, enhanced due diligence, on all your counterparties. But the way that accounts operate on blockchains is, by design, permissionless. And so that's tough for them to wrap their heads around. Regulatory scrutiny, and it's actually shocking how much the second one matters, but it does make sense. Public scrutiny, in association when something bad happens on a chain that you support or you do a lot of your business with, also gives reason for pause. And I suppose there's that common theme where whether you're a compliance officer at a given company, or at a bank, or thinking about it at maybe more of a governmental level, it doesn't really compose the vast majority of your concerns, at least from what we've seen. If you run a normal fintech and most of your payments volume, most of your real business is maybe in, like, say, card processing, or maybe if it's in the US, it's ACH. Crypto is an interesting option to you, but as the organization grows, it's harder to get complete universal buy-in, just because there's so many local, I'll call it, components of that organization. And so, we've been wringing people's, I suppose, heads, or whatever the phrase is, about trying to convince them to support more stables. And the most effective strategy for us has been to abstract away the experience of using stablecoins as the middleware. But naturally, as we go up, I'll call it, the size of organizations, it's been increasingly difficult to get full organizational buy-in. Oftentimes, not everyone there cares about crypto. It's hard to disassociate yourself from, understandings of crypto as that Wild West and the news that you might see about it online or elsewhere. So I do think that as regulatory clarity gets built out, it'll be increasingly easier for everyone from, top down to maybe SMBs or retail at the very end, to start to adopt. But I do think that there is a lot of, I'll call it, refinement required for it to be a home run, or rather a no-brainer, for at least the counterparties that we've been trying to interface with, whether they're existing or prospective clients, to get over the fence.
Yeah.
Very simple things like, uh, you can whitelist all your counterparties. I think we talked about this example, Shiraz, but what happens if there's a validator node in a country that you're not allowed to face off against? It's interesting how that risk assessment process is defined, and I'm hoping that as more of this technology touches the real world and we start to see that value accrual, it'll become increasingly easy. Token extensions being a pivotal part of that on Solana, to convince more buy-in. And I have a lot of faith that will be the next step.
Yeah, I mean, I think everything you're saying. I mean, we had a similar experience on this theme of the technology being trivially simple to implement and the regulatory framework being too far behind. So when we launched Solana Pay as a very simple framework, I mean, it's incredibly trivial. All it is, it's like, at least in the in-store payments side, it's a QR code standard that presents a set of information to a wallet that can construct it into a transaction, right? So we were like, hey, look, it can be very trivial and simple for a user to send some stable coins to a merchant for a cup of coffee, right? Simple, trivial P2P transfer. And the moment we started talking to some larger merchants, like some national chains, the innovation team was like, yeah, let's do this. And their compliance team was like, well, who's the money transmitter? And we're like, well, it's the blockchain. So there's no actual, it's a decentralized money transmitter. And they're like, well, how do we know that the user has not been KYC'd? Well, it's like, this is self-custodial. So it immediately, the barriers, you realize like the tech is very simple, and we're just kind of waiting for some of this regulatory clarity. But I will, on that note, I want to pivot over to Stein, because you guys actually have done some amazing work and seen some amazing traction on merchant payments, more on the online side. But would love for you guys to share, what Helio has been doing, and how you guys have gotten around some of these kind of regulatory complexities as it relates to merchant payments, because I think this is a great case study and success story in the early adoption of stablecoin payments. So yes, Stein, do you want to talk a little bit about what you guys are seeing?
Yeah, for sure. Would love to. So the wave that we are riding, and kind of the belief that we have, is that over time, hundreds of millions and ultimately billions of people will be what I would call crypto fluent. And what that means is that they will know how to use a Phantom or similar type of wallet. And they will be funded with, a very decent chunk of wealth. I think the aggregate market cap of crypto now is 2.5 trillion, or maybe 3 trillion. And it's going into one direction, so it's going to grow. And not everybody is going to want to hoard it and keep it, in their wallets, like traditionally folks have been holding Bitcoin. A large portion of these users are interacting with their wallets on a daily basis, i.e., they want to spend the money that they hold in their Phantom wallets. And our focus is really to create some really easy, call it payment gateway tooling for merchants to tap into that audience. So if you are Solana Mobile selling the Saga 2 on the Shopify store, you can do that with the Solana Pay plugin. I think you guys, Shares, have done a tremendous job in establishing the first relationship with Shopify, and through the simple Solana Pay framework, make it very easy for folks to implement it. You've trusted us with the mission to kind of further the Solana Pay plugin on Shopify. That's what we've been focused on in the last 6 months. And we now see sort of 300 merchants who have sold in excess of 50 million USDC in the last 6 months. Another great example would be Brian Johnston, who I think was the original founder of Braintree. I'm not sure if that is 100% correct, but he's selling his longevity products on Shopify through the Solana Pay plugin. Another great example is Hive Mapper, who's been tremendously successful selling their hardware through that plugin. But it's not just Shopify, it's also other integrations that we've done. We've got a plugin for WooCommerce. We have a plugin for a ticketing app called Bizzabo. So if you buy your Breakpoint tickets, that's fully integrated into Helio, so you can spend USDC or any token on Solana to purchase your ticket, and you just receive instantly your ticket to the event as if you would have been buying with Stripe. Another great example is a Discord plugin. So if you want to have Discord subscriptions, you can do that through Helio. And even very simple self-serve tools like a pay link. We've got thousands of creators who sell merchandise, digital products through these pay links. Probably the craziest example I've seen is a farmer in Indonesia actually selling a real live pig on a Helio pay link. And that's the power, right, of blockchain and crypto wallets, because it's putting bank accounts into the hands of poor people who might not have had access to traditional bank accounts. So, if anyone can just spin up a payment with a wallet in minutes and get paid, that's super, super powerful. And people can really leapfrog kind of, the traditional finance system. And as more and more people come online and are interacting with crypto wallets, I think we're going to see some amazing use cases there.
Like real world swine tokenization, right?
There you go.
Okay, dad joke hour. David, so question for you. So as you hear Stein speak, Helio is, getting a lot of traction for, merchant payment processing. Stripe recently announced that they're going into this. So PYUSD could be a great, stablecoin for all of these platforms and merchant payment processing solutions. But on the flip side, PayPal has an existing business. So how do you, and I asked Jose this last week too, but like, how do you guys, see, like, do you think that within PayPal, people are going to see this, or are going to be able to grok this idea of like working with, being able to have a stable coin that essentially you guys can work with companies that are traditionally competitors and have competitive businesses?
Yeah, it's a good question. Jose probably answer this better than me, but I hope so. I mean, I think obviously PayPal is a public company. We move very, very slowly, as everyone here probably knows. We are actually only in the U.S. You at PayPal, you can access PYUSD globally. It's an on-chain, asset. Obviously, Paxos is our issuer. Um, they're a trust company, but at PayPal on the app and Venmo, you can only buy and sell PYUSD for free in the U.S. right now. So, we haven't expanded yet at the PayPal brand. Yeah, we're looking at, obviously, we're talking to regulators around the world to do that in Singapore, out of Singapore and EU and so on. But, I wouldn't, I think we're right now, a really good partner for a lot of the ecosystem, a lot of people here, that can work, hand in hand with us. You know, we have, I think it's like, 15 million users that have access to the crypto services right now, 400 million around the world. And, with our on and off ramps product where, you can actually, on ramp PYUSD, in wallets like Phantom, through PayPal. You can get access to a huge population of users, and we in most cases are probably not going to compete with you, especially on the payment side. Being that we're talking to a lot of these traditional merchants that we have to educate over many months, to essentially settle in stable coins, and a lot of that is education. We basically are working with the top merchants. I'll give an example like DraftKings is a good example that wants instant. You need to instantly top up your balance, so that settlement, they have to take on some risk to allow you to gamble in the app, and they use PayPal for that. So this is a primary use case for stable coins, and these are the kind of companies we're talking to right now. I would say we want to work together with the ecosystem, because we're not gonna, we're probably not gonna talk to a lot of the same merchants, same companies, same use cases at all. And we are, we're still in the growing and expanding to new geos.
Well, the good news is that, I mean, the beauty of blockchain and being open and permissionless is now that it's issued, PayPal has its restrictions, but now, anybody that holds a stable coin can transfer it to any other Solana wallet. And I think there's a lot of ecosystem teams that are interested in integrating. So, I'm guessing there'll be a lot of organic growth. And actually, on that note, John, it might be helpful to talk a little bit about, for anyone, that's got an app or protocol out there, the maybe we can talk a little bit about, like, and it could be use PYUSD as the example, but if you support the legacy SPL token standard today, what does the work look like to support? And let me take a stab at it. You can be honest. The native, if somebody issues a new token using token extensions, and I have a protocol, I can simply update the program ID to support this new token standard, because or transferring and holding and all that stuff is kind of essentially the same functionality. It's only when certain extensions are enabled where there's some work to do, particularly with the user, with the UX and the UI. But yeah, do you want to talk a little bit about what that, if there people listening that have protocols that are like, hey, I want to support PYUSD?
Yeah, great question. So on the baseline, as I mentioned before, like the token extensions program is a strict superset of the original SPL token program. So for all of the basic capabilities like reading balances, being able to send tokens, all you need to do is swap out the program ID, right? They are two different programs, so you do need to hit that other program ID, but like things like the associated token accounts, all that works identically, right? And the team that built the program, the wonderful folks at Anza, John Chinque and Joe and Sam Kim and all that sort of stuff, they focused a lot on backwards compatibility. So even though there are some new capabilities like transfer fees, so let's expand that a little bit. Like transfer fee says, hey, the issuer of the token wants to withhold, I don't know, some basis points on every transfer to for some economic benefit. Um, in the prototypical world, you might expect, oh, now I need to add this new account. But they did this in a really clever way. Rather than having to add an extra account that would make it backwards incompatible, they just withhold the transfer fees at the destination. And then the withholder can the person that has the withdraw authority can go and harvest it later. The point there, though, is that using functions like the transfer check function or instruction that you're used to from the client side, it'll all work as expected with a vast majority of these extensions. There's a couple of the baseline is basically everything should be compatible from the client side, and by clients I mean like dApps and wallets and stuff like that, provided you use the new program ID. The two corner cases are going to be transfer hooks, where if there's a transfer hook and it's configured, it may require additional accounts. But fortunately, those accounts are stored on chain, so you can just grab it. There's a thing called a account meta list that you can grab. And then confidential transfers. The key thing to remember there is that a token can have both a token account can have both a public and confidential balance. So you can definitely add in support for the public version of all of these things, and just add in confidential support whenever it comes around. So you don't need to block on having support for every single extension before adding in support for these things. And I think I'm trying to think. I mean, the metadata might be in a different place. The metadata pointer shows you where it is. Could be stored on something like Metaplex. It could be stored in another program, or it could just be stored in the Mint account. So that should be a pretty straightforward integration. But yeah, basic stuff, just swap in that program ID. Smart contracts may need to have a little bit of adjustments in the case of things like interest-bearing tokens, and you may need to display the balance for interest-bearing tokens in different ways. But again, very specific corner case for a specific kind of token.
Awesome. All right, I want to open it up a little bit, and so this question isn't directed to anybody, but one of the things that I've heard a bunch of people brainstorm about, but hasn't been realized yet. But maybe now with stablecoins and payments starting to really gain some traction, it can be realized. So this notion of what some have coined PayFi. So if you think about having a DeFi backend on payments, so in the TradFi world, you have buy now, pay later, which when it first came out, people were like, why would anyone use that? And then it wound up being a massive opportunity. It seems like there's so much possible if we have DeFi on the back end. And maybe this is kind of the next innovation cycle that's waiting to happen. But curious to hear from anybody on the spaces, like, what do you think? What do you think about this idea about, like, let's call it PayFi, where you can have payment experiences with DeFi on the back end that would allow for a whole new set of sort of types of lending opportunities, or kind of put staked SOL and use the staking rewards to pay for products, or things like that. So yeah, it's not open for anyone, and no one answers. Maybe Stein, because you're dealing with merchant payments, so maybe you can be the frontier of this.
Yeah, for sure. So first of all, merchants, I think, traditionally are interested in DeFi payments because instant settlement, low fees, you can enable microtransactions, All these sort of things that are inherent to the blockchain. But I think the next sort of evolution, if you will come from more sophisticated elements here. So one of the things we already see with Helio quite a bit is that folks will want to settle in stable coins, but they want to enable the buyer to purchase in any token. So of course Jupiter has done a really awesome job in enabling swaps. So it's pretty cool, right? As a merchant, you can reach this audience that might have Bonk or other meme coins where they've essentially accumulated quite a bit of wealth that they want to go and spend. So guess what? You can now tap into that audience. Folks can spend their meme coins and you are settling in stables. What you can also do with Helio is, for instance, then split that. You use split payments. So you might say, hey, 90% goes to wallet A. That's my treasury wallet. That's what I use for, building up my my balance sheet, and I pay my expenses from that. But 10% I might want to send to a wallet, which I'm then going to start using for building up yield, or split it off into a stable coin that accumulates yields, like USDY, for instance, which has recently come to Solana. So that's a pretty cool strategy. And we already see actually some of our merchants that accept Sol natively and maybe believe in the kind of upward price movement of Solana. They might want to stake it. They actually keep it. So it's part of their treasury strategy. Okay, I'm now selling online, 80% of my revenue is fiat, 20% of my revenue is going to be settled in, in crypto. And maybe I want to keep 75% of that in stables, but 25% I'm going to keep on my balance sheet in certain other currencies. So I think that gives some really awesome flexibility there. And then the other thing is around loyalty. So I saw earlier that the guys from Underdog Protocol were on the call. I think it was Tony. But we've integrated Underdog Protocol. And what happens is when a buyer purchases on a Helio checkout, the merchant can instantly airdrop a CNFT to reward that buyer. And guess what? The CNFT can unlock a discount in the future on the next merchandise that might be shipped. So that's pretty cool, right? So that you can start rewarding and driving loyalty with these type of standards that really Solana has been innovating on. And of course, there's been a crazy sort of hype around meme coins recently. I saw a tweet from Toli saying that he expects millions of meme coins to be created on a monthly basis, at some point in the not too distant future. Maybe you can start rewarding your customers with tokens as well directly that might unlock certain things within your ecosystem as you deliver services to your customers. So yeah, we're starting to sort of see the first signals that merchants are really keen to start leveraging these technologies.
Hey, John, we were talking a little bit about like liquid staking tokens and how maybe they could be sort of like oil in the engine of PayFi. Is there anything you want to talk about, like some of the stuff going on with I can't remember the name of the team that presented at
Yeah, totally. Yeah, Sanctum, wonderful folks, really thought hard about the LST economics on Solana, and basically just remarking that a lot of the tokens that are being staked aren't being used in a productive way. Part of that had to do with like the every time you create a new token, there's sort of like bifurcated liquidity pools, but Sanctum team has found a way to route them all together, and so you don't get that kind of slippage. And what's cool about this is that every team gets an opportunity to simultaneously secure the network, but offer different kinds of products. So, for example, like Helios doesn't take the fees from that stake, but they use it to help basically make their product better. We saw squads. If you stake to the squads validator, you get access to squads pro, right? And so we'll probably see in the long term subscription LSTs, other ways of funding that hit that PayFi kind of like really interesting thing. I'm imagining that this will escape LSTs because that is a very native, I would say, crypto native construct. Even just the like interest bearing token, which is another extension in the token extension suite, allows you to create a continuously compounded interest-bearing token. You can have it track an oracle. You can have it update literally every second if you want, and it does exactly what you expect, which is sits in your wallet and number goes up over time as you earn interest. So there's a lot of cool capabilities there, both on the LSD side and the interest-bearing side, that fit really well into that PayFi vision.
Cool. Any other thoughts on PayFi? If there wasn't, I did want to kind of talk about some of the friction, like to getting people on board. And I think one of the things I'm excited about PayPal for is just onboarding more people to stables, because I think once there's a thriving ecosystem of use cases and people realize like, oh, I can transfer my PUSD and use this remittance app or pay for stuff on Helio or whatever, it'll just naturally organically grow. But David, do you want to talk a little bit about so PayPal's role in just making it easier for people to onboard? Because I think you guys have a unique, so you sit in a unique position to get people to get onto stables.
Yeah, absolutely. Yeah, my jokingly, my title is also bringing the normies onto Onchain, basically. Yeah, we have a really good opportunity to do some of these things. Starting with payments, but also just bringing, the 400 million users at PayPal into the crypto ecosystem. And with Solana now, it's like, it's so much easier. But part of what we're doing is just creating that convenience. I mean, that's really, why PayPal is, in my opinion, so popular. It's just so convenient to use, and it's one of the best on and off ramp experiences. So we connect your banks very easily, and we manage the relationship with the banks for the merchants to process payments. That's basically it. Then we have a bunch of other products on top of that, like remittances, rewards, you name it. And we've amassed over the last 20 years this two-sided network, this app of 400 million users and 35 million merchants. So the stablecoin is just an excellent way to bring adoption to the space. And obviously internally, it's going to help with a lot of our costs and just create a better experience for users and merchants. But one of the things that I pushed really hard for was, since we've launched this stablecoin and we have this on and off ramp product, today it's used by MetaMask and Phantom and some of the bigger wallets. Creating an experience where it's just basically free to on ramp PYUSD. But with Ethereum, there was the network fee, so it was often $3 or $4 or $5, and it was just it was still pretty bad. Now with Phantom, and we're going to integrate into other wallets, it's just going to be zero. So you're basically minting, with dollars. Obviously, the dollars are sent to PayPal, and then PYUSD 1-for-1 is minted into the ecosystem, and that's pretty powerful. I don't think that exists today. It might exist with USDC and Coinbase, but we sort of control both of those products, so we can do that at like a grander scale. And I think that's going to be pretty massive. We're going to do that for the on ramp, and then if you want to bring PYUSD back to your bank account from wherever you are, we're going to do that for the off ramp as well, directly to PayPal as PYUSD, or to your bank account directly. We're in the U.S. only with this. Again, we are going to be global. It's we talked about regulators and the different tasks and hurdles. Like it's tenfold for PayPal to get there, but that's the biggest thing for us, is convenience and just creating the best experience to bring the stablecoin on chain.
Yeah,
that's pretty amazing, David. A quick question for me. So that's huge, right? If people at zero cost can on and off ramp between a dollar and PYUSD. Once you're on ramp to PYUSD, how can it be used within the Solana ecosystem, David? Are people able to switch into Sol, or obviously, with the extensions, there's probably going to be some limitations, but how do you guys see that?
Yeah. So we're a few days in, the things have to sort of ramp up in terms of liquidity. and support. But
Of course.
many of the dApps are going to support this. I wish obviously it could be faster, but we're talking to all the different dApps that use USDC today, right? And we want us to be kind of at par or just alongside USDC, and we're gonna partner with everyone and try to get it deep liquidity to trade in and out of other tokens, and these are all things we plan on doing fully. So you'll see that over the next few weeks, us ramp that up. We're actually only like 25% ramped at PayPal right now. So we ramped to 100% of users in the US by June 12th. So that's when you'll start to see a lot more activity.
Yeah, that's amazing. I mean, think of it as a launch pad for a lot of normies to come and participate in the thousands of apps that are available on Solana. So excellent.
Nice. I was looking at the questions. There's one question for combo of Arnold and David, which was for international markets. I guess it was kind of a dual question. One is, and I don't know if you know this, David. It was asking about PayPal accounts that are not available in certain markets. Like basically, I guess the question was like PayPal's footprint in certain markets where it's not available today to allow some of these users to on-ramp. And then the counter to that question was, Arnold, is this something that Sphere can provide, like user accounts in different markets? So yeah, maybe if either of you have kind of a point of view on like just global footprint of each of your respective initiatives.
Yeah, I'll start if that's cool. Yeah, so we're again, US only right now. Obviously, we actually, it's public now. We officially have our new legal entity created. That's a limited purpose trust. Before that, we were sort of doing it with Paxos. So with that now, we're sort of separated ourselves from PayPal Inc., being now we're PayPal Digital, new brand. And it just helps us in our ability to talk with regulators in Singapore, MAS, or regulators in EU, MICA, or around the world. But we are planning on launching crypto as a whole in other countries. I can't say when, but you'll see some news on this towards the end of the year. When we launched in somewhere like Singapore, it opens us up for like many countries, so it's not just one country, which is really exciting. And I learned that the other day. Because licenses are in effect around that jurisdiction. So if it's Singapore, we actually can open it up to Latin America, believe it or not. So yeah, we're really excited about that.
Yeah. So currently, there are some details. We can do U.S. Account issuance, and soon, hopefully by mid-month, IBAN issuance. For areas outside of Europe and the United States, multi-currency account issuance is just a hornet's nest of like nested payments and opaque risk. And so there are limitations in doing so natively. I'd suggest specialized multi-currency account issuers, maybe with the addendum that there is usually a trade-off if those accounts are being created through correspondence. As an example, time zone differences might end up pushing your payments by at least T+1. That being said, if you're fairly insensitive to when the thing lands, and you just want access to a more liquid market, there are a lot of great options. And if you're moving larger size, we're happy to help on the US or Europe side.
Cool. We've only got a minute. Maybe we can do just any sort of quick closing thoughts for anyone. I'm going to start. I guess the one thing I'll say is for anyone listening, if you're a builder or developer, I'm new to this space, relatively new. I joined this ecosystem 3 years ago. I didn't know anything about really crypto or blockchain before that. And I would say the first couple of years, it felt like, hey, there's a lot of interesting experiments going on. It's interesting tech, but in my gut, it didn't feel like there was anything that was ready to scale. And I would say that in the last 6 months, the stuff I'm seeing in fintech and stable coins and like a lot of traditional fintechs starting to move into this space. And a lot of the startups I'm seeing, it's no longer like pure crypto startup and pure fintech. they're bleeding in. So it really does feel like if you want to build in this space, it's kind of the perfect time. And if we start getting some of this regulatory clarity soon, which looks like it's hopefully coming, then it just feels like we're ripe for innovation, because this is, like I said, like particularly even with just cross-border payments, that it's a massive problem, and it's clear that this isn't necessarily technology looking for a problem solved. So I guess that's my plea, is like, let's dive into the space, because I think it's ripe. Anyone else have any sort of closing thoughts?
I'll take a quick crack. Sure. So I think that fundamentally blockchain payments are super attractive. Crypto payments haven't really taken off yet, but it's slowly happening. I think the challenge is rivaling the experience of the likes of Apple Pay, certainly from a business to consumer perspective. You can just tap your phone and pay in seconds. And beating Apple Pay is kind of the bar I think that we have to aim for. And I always say, guess what? We can already achieve that. If you are a crypto fluent user, you have a funded Phantom wallet, you can already pay on Solana with a Helio checkout with a single tap in less than 2 seconds. And it's all about bringing more people in. So what PayPal has done, I think, making it more accessible to people to get into the ecosystem, then I think things are starting to move a lot quicker than what we've seen so far. So yeah, I'm really excited for that.
Cool. Well, I think we're about a minute over, unless anyone has a dying last thought. I think we can wrap it up. So thanks everyone for joining, and we will talk to you soon. I'm sure. Stay tuned. There's lots of interesting stuff going on in the space and in the ecosystem. So thanks everyone.
Thanks all. Bye.
Thanks everyone.
Thank you, team.
Thank you, team. Jen.